In order to undertake the activities in an organization, finance plays a very important role. The organization cannot afford so much money in order to purchase a product or purchase a machinery. In such cases, they can go for lease financing. It also helps the investors as well as the organization in terms of underwriting of public issue. So in the whole finance industry, there are a number of financial organizations who are providing service to the customers. Hello everyone, I am Arshita, lecturer, Department of Commerce, Vidyashram First Grade College, the Temple of Excellence, Mysore. My dear students, today we shall have a revision on Financial Management 3. Under that we are going to learn about financial services, and this is for 6th Sem BBA students. So my dear students, today we shall revise from Unit 1 to Unit 3. Hope you have gone through the sessions. We have discussed in detail about all the concepts. Today we shall revise those concepts from Unit 1 to Unit 3. So your Unit 1 was about Introduction to Financial Service, Unit 2 is Merchant Banking, and Unit 3 is Mutual Fund. Let us revise once again all the concepts which are important from the examination point of view. Now we shall directly go to the session. So first we shall see what is the meaning of financial service. So you know, finance is required for each and every organization. So in order to undertake the activities in an organization, finance plays a very important role. So finance is called as lifeblood of the business, without which the business cannot sustain in the market. So before 1991, this commercial bank as well as financial institutions were providing finance to these type of business organization. Later, that is after 1991, that is after economic liberalization, the importance was given to financial service. So financial service grew to such an extent that now it is one of the important service or important sector in the economy. That is, it provides a major role in the economy. That is financial service. Now what is the meaning of financial service? The service which is provided by the financial organizations are called as financial service. So there are number of service which is provided by the financial organization. So such type of service are called as financial service. And there are group of organization, there are group of financial organizations, and whole group of financial organization is called as finance industry. So in the whole finance industry, there are number of financial organizations who are providing service to the customers. That is financial service to the customers. Hope you are clear with the meaning of financial service. So financial service refers to service provided by the finance industry. So I have told you the group of financial organizations are called as what? Finance industry. What is their main aim? To provide financial service to the customers or clients. The finance industry consists of broad range of organizations that deal with the management of money. So they normally deal with the management of money. So here the word itself says that finance. So what do you mean by finance? Finance means money. So in this subject you are going to learn about in detail about financial service. So your first unit is all about Introduction to Financial Service, where you are going to learn about financial service in detail. Later your unit will be regarding a particular type of financial service. So it may be merchant banking, mutual fund, lease financing or factoring. So these are the various types of financial service organization where they are providing financial service to the customers. Now let us see what is the nature and scope of financial service in the economic development. Of course, I have told you it has grown to such an extent that now it is one of the important sector in the economy. Let us see what is the nature and scope of financial service in the economic development. How this financial service has led to the development of economy. So developed countries have always shown a strong financial service sector. Of course, these developed countries will have a strong financial sector. So if you see the first one, it helps in growth. So it is growth of the business. So by providing finance itself, they can undertake various types of activity, thereby the business can be grown. So this financial service will help those organizations who are need in finance in order to undertake risky ventures, or in order to undertake any of the project, it requires finance, and that finance will be provided by whom? By the financial service organization. So thereby it helps business to grow. So there are number of ideas will be there, but there are no sufficient finance to implement that ideas. In such cases, this financial service will provide by providing, or this financial service will help by providing them finance. Next, capital growth. Of course, if the amount which is invested in the project, it will yield certain return, right? So thereby the capital of the economy will also grow. So it helps to increase the capital of the economy. Next, promotes entrepreneurship development. Of course, there are number of entrepreneurs who is having an idea to undertake the business activity, but there is no sufficient finance. For the new entrepreneurs, these financial institutions does not provide finance because they don't have that security to give to the financial organization and take the loan. In such cases, this financial service will help such kind of new entrepreneurs who are with the new ideas and who undertake the risky ventures. So here it also promotes the entrepreneurship growth. Next, infrastructural development. Of course, in order to develop the infrastructure, of course, it requires huge amount of money. So that money will be provided by the financial service sector, thereby the infrastructure also will be developed. Next, healthy competition. Since each and every type of financial service organization are providing variety of service to the customers, so there will be a healthy competition among the financial sector itself, because each one want to compete in the market, each one want to attract the customers. In such situation, it also leads to healthy competition in the market. Next, promote free and easy trade. So here, the burden of some other person will be taken by this financial service sector. So, by providing the finance, it's not that just providing the finance. Along with that, it provides guidelines, it provides consultancy services on behalf of somebody. It will work as a service provider. So, thereby, it reduces the burden. It reduces the burden of the customers and promote free and easy trade. Next is networking of finance. So, here, if we tell about financial sector, it's not only one financial organization which is working under that financial sector. There are number of financial organizations who are interlinked with each other. Suppose a person want to do some activity, so it's not that only one financial organization will help that person. So here number of financial organizations which are interconnected with each other. So we have discussed in detail. So it is a network of finance. It's not only one financial organization which is providing all type of service. So different types of organization are providing different kinds of services. So thereby it's not that only one organization. So it is a network of finance. Next is easy credit and loan availability. So when compared to financial institution or any other commercial bank, so here the services which is provided is easy credit and loan availability. Next one is job creation. Of course, financial service mainly focuses on human resource. So it mainly focuses on human resource, where the importance is mainly given to the human resource, where, as I have already told you, the quality of the information or the quality of service which is provided by the financial organization depends upon the quality of information what is provided to the customers. Whereas if you see a product, the quality of a product depends upon the quality of machinery being used, right? Whereas here, the quality of service depends upon the quality of information what is provided to the customers. So here, who will create that information? Human resource. Human beings will create that ideas, right? So that ideas as well as the new information will be given by whom? Human resource. So there is a greater scope for this job creation because there are huge number of requirement of human resource for the development of new information. In such cases, it leads to new job creation. Next, balance in the economy. Of course, thereby by fulfilling all these objectives, thereby it leads to balance in the economy. That is, it or the financial service will help in balancing the economy. So these are the nature and scope of financial service in the economic development. Next, we shall see what are the types of financial service. So there are various types of financial service we have discussed in detail. Let us go through the points now. So financial service are classified into two types. One is asset or fund based service. So the first one is asset or fund based service, where under that there are number of asset as well as fund based services. Next one is non-fund based service. So here also we are going to discuss in detail what are the various types of non-fund based services. So if you see the first one, asset or fund based service. So the first one is equipment leasing or lease financing. So here a property can be obtained through lease financing. So we have discussed in detail about lease financing, where the organization cannot afford so much money in order to purchase a product or purchase a machinery. In such cases, they can go for lease financing. And there are a number of financial organizations which are providing this lease financing. Next is hire purchase and consumer credit. Of course, here also the goods or the machinery can be purchased on hire purchase system, where the payment will be made in installments along with the interest. So they also plays a very important role. Next, bill discounting. Suppose if the goods are purchased on credit basis, in such situation, so the duration is very big. So the duration is very far. In such situation, what the seller can do, seller can take that bill and discount that bill in the bank and take the amount immediately. So that what happens in bill discounting. Now what do you mean by bill discounting? So here this normally happens in case of purchase or sale on credit basis. Suppose if the seller have sold the goods to the purchaser on credit basis and the purchaser have not made the payment. He has taken 30 days in order to make the payment. In that situation, if the seller is in urgent need of money, he can take that bill and he can go to the bank and discount the bill and take the money back. So we have discussed in detail about the bill discounting. So it is also one of the important financial service where the seller needs urgent need of money. In such cases, they can go for bill discounting. And the next type of asset or fund-based financial service is venture capital. Now, what do I mean by venture capital? Here, suppose a person wants to take risky ventures or a high project. During that situation, this financial institution and commercial bank will not provide fund to such type of investors. In such cases, in order to undertake the risky ventures, so these financial services will provide the finance. That is known as what? Venture capital. And the next one is housing finance. Of course, for the construction of house also, the finance will be provided, which is known as what? Housing finance. And insurance service. Of course, we know about insurance service. There are two parties, insurer as well as insured, where the risk of one person will be borne by some other person. So we know that about insurance service. So it is also one of the important financial service which is provided by the finance organization. Next, factoring. So here this factor act as a mediator between the seller as well as the buyer. So we have discussed in detail. Next, in forfeiting also, here forfeiter act as a mediator between the importer as well as the exporter. And the next one is mutual fund. So what do I mean by mutual fund? Here, normally the small investor will not be able to invest in big securities. In such cases, all the poolings of small investors will be brought together and that huge amount will be invested in the profitable ventures. And whatever the profit they will get after the investment, that will be distributed among the small investors. So that we are going to learn in mutual fund. Next, non-fund based service. Here we are going to learn about merchant banking. Now, what do you mean by merchant banking? Here the merchant bankers does not provide directly or does not provide fund directly to the customers, but they will make arrangement for the funds. So there are various types of merchant banking. So here what you have to remember, merchant banking are those financial service where they make arrangement for the fund and they will not directly provide the fund. Along with that, they will provide consultancy services, like they will provide advice, they will provide guidelines, they will give the instruction. So such type of activities are done by the merchant bankers. Next, credit rating. So here, in order to check the credit worthiness of a particular company or a particular organization, so this credit rating agencies are involved. That is, in order to check the credit worthiness of the organization. Next, stock broking. Of course, we know about stocks, right? So here, in order to purchase or sell the stocks, this merchant or a stock brokers act as a mediator. So it is also one of the important service which is provided by the financial organization, that is stock broking. So they will have sufficient knowledge about the stock market. So they will help the investors in trading in stocks. Next is custodial service. So here it acts as a security. So it acts as a security of some other person. That is known as what? Custodial service. And the next one is loan syndication. Now, what is loan syndication? If an investor wants huge amount of money, but there is no sufficient amount of money in the bank, in such situation, group of banks will come together and they will provide the loan. So that is known as what? Loan syndication. Next is securitization of debt. So here it acts as a securities for the debt. That is known as what? Securitization of debt. Next, we shall see about merchant banking. So what do you mean by merchant banking? I have already told you, they will make the arrangement of fund and they will not directly provide fund to the customers. So here merchant banking is a non-banking financial activity. So here it is a non-banking financial activity, but it acts like a bank. But it does not provide directly fund to the customer, but it makes arrangement for the funds. It is a financial service. It includes the entire range of financial services because along with arrangement of funds, it provides consultancy services also. So it acts as an advisor, it provides guidelines, it gives instructions, it gives the information. So such type of activities are provided by the merchant bankers. So merchant banking is a process of transferring capital from those who owe it to those who need it. So here the merchant banker act as a mediator between the person, one who owes the money and one who needs the money. Now let us see what are the service which is provided by the merchant banking. So the first one is corporate counseling. So here counseling in the sense what? That is collection of detailed information about the corporate. That is about the business. It collects detailed information because it acts as a mediator or it acts as a guidelines or it provides consultancy services. For that reason, it should know thorough knowledge about each and every corporate. So how they are running, what is their financial position, whether it is suitable to invest in that particular corporate or not. So that is known as what? Studying about the corporate. That is one of the service which is provided by the merchant bankers. Next, project counseling. Here they are going to counsel the project. So how worth the project is, whether it is a profitable project or not, what is a return on that particular project. So that will be counseled by whom? That is the merchant banking. Next is pre-investment studies. That is, before investing, a detailed study has to be done about that investment, which is called as pre-investment studies. Next, loan syndication. So this I have already discussed. So what do you mean by loan syndication? Suppose if an investor wants huge amount of money and the bank does not have sufficient amount in order to provide loan. In that situation, a group of banks come together and they will provide loan, which is known as loan syndication. Next, issue management. It helps the organization also while issuing shares to the public. So how much shares has to be issued, how it has to be raised. So such type of information will be given by merchant bankers. Next, underwriting of public issue. So here it also helps the organization, or it also helps the investors as well as the organization in terms of underwriting of public issue. Next, portfolio management. That is, it helps the investors to invest in various types of securities. That is, in order to distribute the risk, so they can invest in various types of securities. Next, merger and acquisition. Of course, merchant bankers plays a very important role. It collects detailed information about the mergers as well as the acquisition of the organization. Next, foreign currency financing. That is, it helps in trade of foreign currency. So, it helps in converting of foreign currency. That is known as what? Foreign currency financing. Next, working capital finance. That is the capital which is required for the day-to-day activities of the business. So that also will be done by this merchant banking. Next, acceptance of credit and bill discounting. So this is also one of the important service which is provided by the merchant bankers. Venture financing. That is, in order to undertake the risky ventures or the new projects. So this merchant banker act as a advisors. Next, lease financing. Of course, it plays a very important role in lease financing also. It contacts or it helps in connecting the people of this financing. That is lease financing. Relief to sick industries. That is, those industries who are not profitable in nature or who cannot survive or who are in a position where they can't survive in the market. So this merchant banker relieves such type of sick industries. Next, project appraisal. That is, evaluation of the project will also be done by this merchant bankers. Now let us discuss about mutual fund. So what do you mean by mutual fund? I have already told you there are number of small investors. So there are number of small investors who does not have sufficient amount of money to invest in huge securities or high profitable securities. In such cases, what the merchant banker will do, they will pool the savings from the small investors. Now this is the merchant banker. Now they will pool the savings from all these small investors, and this huge amount will be invested in profitable securities. And whatever the profit which is earned from this securities, so that will be distributed among these investors in the ratio of their capital contribution. So this is about mutual fund. So it helps both the organizations, at the same time it helps these small investors in order to earn their profit. It helps the organization by providing huge amount of fund. In same way, it helps the investors to invest their idle money into profitable ventures. So that is about mutual fund. It is also one of the important financial service. So a mutual fund collects the savings from the small investors, invest them in government or other corporate securities, and earns income through interest and dividend beside capital gain. Beside the capital gain, an extra amount will be earned by this mutual fund. So it is nothing but pooling the savings of small investors and investing that huge amount in profitable investment. Now let us see what are the advantages of mutual fund. So it helps to mobilize the small savings. Of course, it helps the investors' idle saving to be invested in profitable ventures or profitable business or profitable securities. So it will transfer the idle money into profitable investment. Next, diversified investment. So here what the mutual fund do, whatever the amount which is collected from the small investors, so that amount will not be invested in one particular security. So that amount will be invested in various types of security. So this is done in order to reduce the risk. Suppose if one security is in loss, then the high profitable security will be compensated with that. So for such a reason, here the investment is made in diversified securities. Next is provide better returns. Of course, for those investors, they will or it will help to provide better returns for their investment, because the securities are invested in various types of, or the amount is invested in various or diversified security, where each and every security is having their own rate of return. So thereby it helps to get better rate of return. So the ideal savings can be invested in better investment. Next, better liquidity. So whenever the investors wants that money, so it can be easily converted into cash. So there is an option in mutual fund where they can easily convert their mutual fund units into cash. Next one is low transaction cost. So when compared to other types of financial service and a mutual fund, even a small investor can invest in mutual fund. So the transaction cost is very less in mutual fund. Next, reduce risk. So as I told you, since the investments are made in diversified securities, so if one security is in loss, so that can be compensated with the profitable security. So thereby it reduces the risk of the investors. Next, professional management. So here mutual fund has to be professionally managed. So it's not that a normal person can manage the mutual fund. So there are a number of professional employees who are working in mutual fund who has sufficient knowledge about the market as well as the investors. Of course, they should have a sufficient knowledge about the market because they are investing some others' money, right? So here only the professional persons will be employed in mutual fund who has sufficient knowledge. Next is offer tax benefits. So through this mutual fund, it also offers tax benefits to the investors. Next, support capital market. So I have already told you here the small investment will be invested in huge profitable ventures, right? Here the small investors amount, that huge amount will be invested in capital market where they require huge amount of money, and thereby it also supports the capital market. Next, promote industrial development. So through this or investment in capital market thereby leads to industrial development where they require huge amount of money. Keep the money market active. So this in mutual fund the transactions will be often or on a regular basis, thereby it helps to keep the money market very active. Now, if you see the disadvantages of mutual fund, it also suffers from market risk where the market will keep on changing, thereby it has to suffer from market risk. Next, investment risk also. So, there may be a chances that there may be a fake investment where the securities may be in loss. In such cases, the investor has to face this investment risk. Next, business risk. So, here in the business itself, if the business is not running properly but the investment is made by the mutual fund, in such cases, this business risk also affects the investor's profit. Next, political risk. So, these are non-avoidable risk where due to political changes also the mutual fund investors have to suffer. Next, scheme risk. There are certain schemes where the problem will be in that scheme itself or the scheme is not running properly. In that situation, the investors have to face the risk. So, these are the certain disadvantages of mutual fund. Now, let us see what are the types of mutual fund. We have all discussed in detail about each and every mutual fund in the sessions. Now, we shall go through. Mutual fund or mutual fund scheme can be classified into following types. That is, on the basis of operation, it has been divided into close-ended fund as well as open-ended fund. And on the basis of return or income, it has been divided into income fund, growth fund as well as conservative fund. Now, what do I mean by close-ended fund? So here the investment will be for a particular target. So once the target is reached and along with the target the period will also be fixed. So here the investment will be made for a particular target, at the same time the period will be fixed. after which the investors cannot invest in such type of mutual fund. So that is known as what? Close-ended mutual fund. And open-ended mutual fund is that it is reverse of close-ended mutual fund. Here the investors can invest their money whenever they want. So there is no particular target for that type of mutual fund. So here the investors can invest their money whenever they want. So that is called as open-ended mutual fund. Next, on the basis of return or income, it has been divided into income fund, growth fund and conservative fund. Now, what do you mean by income fund? Here, the capital of the investors will remain fixed, whereas they will get a regular income on this type of fund. So, here the capital of the investors remains fixed, where they will get an extra income on a regular basis, which is called as income fund. So, here there is no chances for the capital growth. So, it is called as income fund. Now, what is growth fund? So, under growth fund, the capital of the investors keeps on increasing, but there is no regular flow of income. So, it is mainly focuses on long-term basis, whereas income fund mainly focuses on short-term basis. Next, conservative fund. So, it is a combination of both debt and equity. So, that is called as what? Conservative fund. Next, on the basis of investment, it has been divided into equity fund. So, that is dealing with the equity where there is high risk as well as high profit. So, such type of fund is called as equity fund. Next, bond fund. Here, unlike equity, there is no much risk, but they will get a fixed rate of return. But there is no expectation of high profit, they will get a fixed rate of return under bond fund. Next, balanced fund, it is a combination of both bond as well as equity. So, certain portions will be invested in equity where they can expect high rate of return along with high risk. At the same time, certain portions will be invested in this bond fund where they will get fixed rate of return. Next is fund of fund scheme. Here, the unit of one mutual fund will be invested in some other mutual fund. That is known as what? Fund of fund scheme. Next, a taxation fund. So here, that is, it is relating to the taxation. That is, on the basis of Tax Authority of India, this mutual fund is been invested. Next, a leverage fund. So here, the securities are invested in government bonds, not on the private bonds. Next, index fund. That is, depending upon the index of the shares, the investments are made. That is known as index bonds. Next, money market mutual fund. That is, in money market, the fund is being invested. That is, in order to undertake day-to-day activities of the business. So, this type of mutual fund is being invested. Next, offshore mutual fund. That is, the mutual fund of the foreign countries. That is, abroad our country, that is known as what? Offshore mutual fund. Next, gilt fund. Here the main focus is given in the investment of government securities, not on private securities. So, they are called as what? Gilt funds. So, these are the types of mutual fund. Now, let us see the difference between close-ended funds as well as open-ended funds. So, we have already discussed about it. This is also one of the type of mutual fund. So, if you see close-ended fund, under this type, the fund and size of the fund and its duration is fixed in advance. So, here I have already told you there will be a particular target and there will be a particular fixed period. So, once the target is reached and once the period is over, thereafter, the investors cannot invest in such type of mutual fund. So, it is called as close-ended funds. So, under this type of fund, the size is fixed. Along with that, the duration is also fixed. Once the subscription reaches the predetermined level, the entry of the investors will be closed. So, I have already told you, once the time is over, at the same time, once the target has been reached, then the investors cannot invest their money in the close-ended mutual fund. After the expiry of fixed period, the entire corpus are disinvested and the proceeds are distributed to the unit holders in proportion of their holding. Once the target is reached, once the period is over, whatever the amount invested by the unit holders, so that will be refunded to the unit holders. So, this is about close-ended funds. Let us see what are the features of close-ended funds. So as we know, the period and the target amount of the fund is fixed in advance. Next, once the period is over and or the target is reached, the subscription will be closed. So of course we know once the target or once the period is over, the target or the mutual fund scheme will be closed. Investors cannot purchase any more units. The main objective is capital appreciation. So here the main focus is given for capital appreciation. At the time of redemption, the entire investment is liquidated and the proceeds are liquidated and it is distributed among the unit holders. So once during the time of liquidation, the whole amount will be distributed among the unit holders. Units are listed and traded in the stock exchanges. So under close-ended mutual fund, the unit should be listed and it is being traded in the stock exchanges. Generally, the price of the units are quoted at a discount up to 40%. 40% below their net asset value. So it is being issued at discount at 40% of their net asset value. So this is about close-ended fund where the target as well as the time period will be fixed in advance. After that, the investors cannot invest in such type of mutual fund. Now we shall see about open-ended mutual fund. So this is just reverse of close-ended funds. So this is just reverse of close-ended fund where the period as well as the target is not fixed in advance. So it is open to the market. So here the investors can invest their money whenever they want and how much amount ever they want. So there is no particular target for the investment. So this is just reverse of close-ended fund. Under this scheme, the size of the fund and of the period is not fixed in advance. So it is not fixed in advance. The investors are free to buy and sell any number of units at any point of time. So this is a main difference between open-ended fund as well as close-ended funds. Hope you are clear with these two difference of open-ended and close-ended funds. Let us see what are the features of open-ended funds. The investors are free to buy and sell the units. There is no time limit. So there is no time limit. At the same time, there is no particular target. These are not traded in stock exchange, whereas this open-ended fund or a close-ended fund is traded in the stock market, whereas open-ended fund is not traded in the stock market. Units can be sold at any time. So here they has a right to sell the units, that is mutual fund units, whenever they want. There is no particular restriction. The main motive is income generation, whereas the main motive of this close-ended fund was capital appreciation, right? Here it is income generation, that is dividend, etc. The prices are linked to the net asset value because units are not listed in the stock exchange. Whereas under close-ended fund, it is given at a discount of 40% of the net asset value. Whereas here, since it is given at a net asset value because it is not linked in the stock exchange or it is not traded in the stock exchange. So these are the main difference between this open-ended as well as close-ended funds. My dear students, today we had a revision class on Unit 1, Unit 2 and Unit 3 of Financial Management 3, that is Financial Services. See you all in my next session. Till then, take care. Thank you.